Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 7th of February. We have just left behind us a volatile trading week and busy economic data calendar, which kicked off February 2022 trading activity. We are heading into a slightly quieter week ahead of us, which starts with Chinese Services PMI data on Monday. On Tuesday, we should be on the lookout for US goods and services trade balance. Moving forward, on Wednesday, the main point of interest is reserved for US crude oil inventories. On Thursday, we should be on the lookout for US consumer price index data for January and weekly jobless claims. The week will finish on Friday with UK preliminary GDP Q4 figures and US Michigan Consumer Sentiment Index. Now, let's take a look at a few markets. Hi, let's start with the Bitcoin. Bitcoin is consolidating sideways. A key trading level for Bitcoin from this intraday point of view is at 37,000. As long as that level holds, we could see a corrective pullback to that level and a rally from there, or possibly a breakout above these current clusters of the highs, and in particular breakout above 42,000, 42,500 on the upside. A retest of that level from above as a newly found support could open the way for a gradual move higher, targeting additional resistance at 46,000, possibly even 48,400. Alternatively, if we see corrective pullback and an end of day close below the cluster of these lows at 36,560, that could change the outlook, potentially opening the way for more meaningful corrective pullback to the downside, targeting additional support at 34,000. This is DAX or German 40. The price action is correcting at the moment. This appears to be a rising wedge, and the price action is creating the sequence of lower highs in different time frames. Key trading level going forward is at 15,300. As long as that level holds as a resistance, bears are in charge. Rally into that level and a rejection or a gradual move lower and a loss of these current lows, in particular the loss of 15,000, which is nice and round number, that could open the way for a deeper corrective pullback, continuation to the downside, targeting additional support at 14,800, possibly even 14,530. Alternatively, if you see a rally and an end of day close, a push above 15,300, that could open the way for an additional retest of 15,500, therefore a breakout level of this rising wedge. Breakout above that level and end of day close above 15,500 could open the way for the retest of additional resistance at 15,720. This is the US Tech or Nasdaq index. The price is consolidating, it's coiling here, energy is building up, and these type of patterns normally precede explosive breakouts in one way or the other. The price action is still downtrending, so it's bearish from a longer term point of view. Key trading level going forward is at 14,500. If we see a pullback to that level and a loss of that level, an end of day close below that level could open the way for an extension to the downside, therefore another leg lower, targeting additional support at 14,270, 14,000, possibly even 13,800, 850. Alternatively, if we see a push higher and a breakout above 14,825, that could trigger a short squeeze, extending the price to the upside, targeting additional resistance at 15,000, nice and round number, 15,200, breakout above that 15,500, 15,800 might come in play. Euro dollar, we had explosive move higher as a result of ECB press conference, more so than the actual rate decision. Key trading level going forward is at 1.14, nice and round number. We are seeing an oversold bounce back here, and in end of day time frame, the combination of these 4-hourly candles is pointing to a spinning top, i.e. a little bit of indecision, wicks on both sides with a small trading range in the middle. they normally precede a bit of a consolidation, if not a correction. So key trading level going forward is at 1 spot 14. So if I see a push lower and end of day close below 1 spot 14, a retest of that level from underneath as a newly found resistance, it could open the way for a gradual move lower, retest of these higher lows, trend line and moving averages at 1 spot 13, 1 spot 12.85. Only the end of day close below that level could open the way for the retest of 1 spot 12 once again. Alternatively, if we see a rally from here and an end of day close above 1 spot 14.85, 1 spot 15, that would negate the oversold bounce back outlook, potentially targeting additional resistance towards 1 spot 16, 1 spot 16.40 on the upside. This is cable, sterling, dollar as well. We are seeing a bit of a corrective pullback here on Friday after an oversold bounce back over the past several trading sessions. Yet again, we had the Bank of England interest rate decision. They appear to be a little bit more hawkish than European Central Bank. But currently this currency pair appears to be consolidating at the moment, capped by 1 spot 36. That's a key level on the upside. A key level to the downside, 1 spot 35. A breakout above 136, an end of day close above that level, and a retest of that level from above could open the way for the extension to the upside, targeting 136.50, 137, 137.30. Alternatively, if you see continuation of this selling pressure and the loss of this lows down here at 1 spot 34.50, retest of that level from underneath, that could open the way for an extension to the downside, targeting the cluster of these lows at 1 spot 33.70, 1 spot 33.50 zone, possibly even 1 spot 33 even to the downside. This is dollar yen. Dollar yen had a bullish reaction to non-farm payrolls, in particular. Higher number than expected is leading market participants towards the bullish reaction with US dollar, i.e. More likelihood that Federal Reserve will likely carry on hiking rates with a faster pace, or maybe more times than anticipated throughout this calendar year. So therefore US dollar bullishness at the moment. Key trading level going forward is at 114.80 to the downside. As long as that level holds, bulls are in charge. Pull back to that level and a rally, or a rally from the current levels and a breakout above these current swing highs at 115.50, 115.60 zone could open the way for the extension to the upside, targeting 116.10, 116.50, possibly even 117 over the medium time frame. Alternatively, if we see a corrective pullback and end of day close below 114.80, that could open the way for the retest of cluster of these lows. Once again, 114.50, 114.30, breakout below that targets the cluster of these lows from 21st of January until 26th of January at around 113.90 again. Now let's talk about gold. Gold had a sideways consolidation here. We had a few attempts for the price to push lower, but the buyers came in and bought the dip. Key trading level going forward is at 1808 with gold. Push higher and end of day close above that level could open the way for the potential extension to the upside towards 1815, possibly even 1820. Only the end of day close above 1820 and a retest of that level from above as a newly found support could open the way for the extension to the upside, targeting additional resistance at 1831, 1837, breakout above that level 1845, 1850, 1853. Alternatively, if we see continuous selling pressure and an end of day close, a red candle closing below this rising trend line and below the wicks of these current lows, in particular 1790, retest of that level from underneath, that would signal a bearish consolidation, correction to the downside, targeting additional support at 1780, loss of 1780, 1775, possibly even 1760 over the longer time frame. Lastly, let's talk about crude oil. Crude oil had bullish breakout higher. For those of you who watched last week's outlook, you know I was looking at 85 as a major level of interest. The price came close to that, 85.60, 85.70, and then rallied from there. Very, very bullish price action. Sequence of higher lows. The current price is supported by rising trend line and also multiple moving averages, 20, 50 and 200. It seems to me that this is a buyer's market. Bullish traders are in charge. So if we see a corrective pullback from the current overextended levels towards this rising support area, very close to 88, 87, 80, and a rally from there, or if we see a breakout above 92.20, 92.30 and an end of day close above that level, that could open the way for a gradual move higher, therefore extension of this buying pressure towards 93.70, 95 over a longer period of time, possibly even 98.80. Alternatively, if you see a dip lower and the loss of 88, a retest of that level from underneath as a newly found resistance, that could signal a deeper corrective pullback targeting additional support at 85.60, possibly even 83 to the downside. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.